Good afternoon. It is August the 25th, 2017. We'll start with our usual disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since trades have not been executed, the result may overcompensate for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with a benefit of hindsight. No representation being made that any account will or is likely to achieve profit or losses similar to those shown. Two breaths. Got to have some fun with that. I mean, it's just, it's there. It's a legal requirement, etc. So, anyway, we're going to open up today. It looks like Hurricane Harvey is going to come on shore somewhere around Corpus Christi, go on shore, then do a 270, then head for Houston. It's supposed to drop 24 to 36 inches of rain. Depending on who's unlucky enough to be underneath that. And that's going to affect offshore crude production. Production platforms are being shut in. This is the shallow stuff along the Texas and Louisiana coast, so that will be affected. The deep stuff out in the Gulf obviously won't. So crude oil prices are up in response to that. I don't know what the state of Texas will look like under that kind of water, but I can't imagine 36 inches of water falling with a short period of time. Anyway, as far as financials, treasuries, gold, and currencies go, the markets are awaiting Yellen's speech at 10 Eastern, and then Draghi's speech I think is at 3 Eastern today. So Draghi might have more impact, but it'll be deep into the day, maybe an hour left of trading, and probably won't have a lot of impact. And frankly, the news articles are going to say that Draghi's not going to say much one way or the other. So down to what Yellen and Draghi say, either one of them can move the markets. We have durable orders at 8:30 Eastern, minus 5.8%. Ex-transportation plus 0.4. Core capital goods plus 0.5. I haven't seen core capital goods hit their number once this year. It would be nice if it did. It would show you that businesses are expanding in anticipation of better days to come. But durable orders, ex-transportation will be the first piece of news we get. Normally it can move markets with Yellen's speech coming in an hour and a half later. I doubt it. Baker Hughes rig count 1160. Both these numbers can come in lower than forecast. 946. These are last week's numbers, so my guess is this one especially will come in a little bit lower than forecast. So news focus, durable orders, ex-transportation. Resistance is at 24 to 28. I think we're in a trading range today, subject to news spikes. Would like to sell the 27 to 31 area, may not get it, so 23.27 sell 1, 31.03 sell 2. On the buy side, we'll make 17 to 13. We're dealing with a B buy 1, and 5 to 9 buy 2. Option expiration today says that the 10-year will close at 26.16, and we'll see if that actually happens. Looking at the 30-year, the close on the 30-year 156.16, according to the option plays this week. It's way up there, so that's probably going to cap the market. Right now, 8 to 12 is number 1, 15 to 19 sell 1, 23.27 sell 2. On the buy side, 28 to the buck, number 1, 21.25 buy 1, 13.17 buy 2. Looking at gold. Pretty tight trading range. With new spikes, we'll just leave 94.96, sell 1. 99.01, sell 2. 89 to 91, buy 1. And 85.87, buy 2. Okay, when Yellen and Draghi speak, you'll get the tone of the speech in their opening comment. It'll be hawkish or dovish. Then there will be a counter comment to mitigate that a little bit. So there's almost always a whipsaw on a news spike when Draghi and Yellen pick up the mic. Yellen is expected to say the Fed is intent on raising interest rates at the end of the year in December if the data warrants. And there's a lot of supposition about when the taper will begin. Right now, people are guessing into September, first part of October. Again, if the data warrants. And that's the out that both Draghi and Yellen both have. Okay, Draghi's biggest impact, and most of the comments this morning about what's going to happen to the dollar. Draghi's biggest impact usually is on currencies, as you'd expect. The currency market is playing for maybe interest rates being bumped sooner rather than later. So we're in our number 2 sell zone from yesterday, 40 to 50, sell 1. 75, sell 2. Draghi can move the market 1 to 3 full points when he speaks. 18.10, buy 1. 75 to 85, buy 2. And if you're on the wrong side of a Draghi comment, you just have to get out. Just if you make your best guess and position in front of Draghi picking up the mic, make sure you have a stop. You will be slipped on the fill, no doubt. But you're not going to be slipped a full point or 2 points. And that's what happens if you try to ride that stuff out. Crude oil up because of the hurricane. Or hurricane, depending on what part of the world you're from. So probably a seller at 48, 48 and a quarter. Kind of where we were last night. You can see that the hurricane doesn't have anybody too excited because it's the shallow production along the Texas coast that's being hit. That is significant, but it's not like losing the Louisiana Loop or the deep Gulf production off of Louisiana. 47 and a quarter, 47.50. My inclination would probably be to play it long. See if we could take out 48, 48 and a quarter. Have no problem getting short at 48, 40 quarter, 48 and a quarter. But due to the uncertainty of the hurricane, the downside's probably limited. And they're still looking for a Category 3 when it makes landfall. And the E-mini. Every central bank in the world since 2009 has propped up their stock markets. The stock market is playing like there won't be any comments to take the stock market down today from either Yellen or Draghi. We'll have to see. Gary Cohen this morning at 5 Eastern made an announcement that there would be tax reform by the end of the year. That gave us this boost right there. And it remains to be seen if there will be. Everybody's all at Twitter now about the debt ceiling, and the Republicans won't find them. The Democrats will demand and get concessions so that they vote and the government does not get shut down. But you know, governments have been shut down before. It has never hurt the Republicans nor the Democrats who are in power when they were shut down. And they're talking about debt service and defaulting. That's baloney. What they're talking about is having to make tough choices on all these big, out of control, a lot of them out of control, pointless government programs that are in place right now. Can never cut a government program, can never give them $1 less than they got last year. It's the way that it works. So, but I don't anticipate there'll be a government shutdown. If there is a government shutdown, that is supported for treasuries, because supposedly there'll be less supply of treasuries out there. Okay, we've got news at 8:30 Eastern. Normally would impact the market. Probably will give us a little bit of volatility, but then the eyes are going to go back on Yellen's speech, which is at 10 Eastern. Be back with you as fast as I can get to you.